Welcome to AllGen's Money Minute. So a question that's on many folks' minds these days is, what should I do when the market is tanking? So as of the recording of this video, there's the famous coronavirus is spreading globally. Okay, so that's causing an effect globally, not just from a health situation, but economics. And we see that the market's taking a dive. Okay, so as we are constantly in front of clients, meeting with them and prospects, a lot of people are concerned. Hey, what should I be doing? Should I be selling? You know, we've had some that are saying, should I be buying? Okay, so Jason, I want to get your thoughts on this because this is a great time to be giving advice that not just for the coronavirus, but when the markets go down in general, what should people be thinking?
Yeah. So the most important thing really in terms of preparation first off is you need a plan. Okay, so not a plan necessarily for when the markets go down, but a time-tested plan that works when the markets are going up and down. So we always talk about our AllGen's path to financial freedom, which talks about paying off consumer debt first, having emergency reserves, having all the proper insurance in place, so that if you go through a bad time, like we're going through now, if you lose your job, if the economy takes a hit, if you have to replace a roof, your car breaks, you can just pay for that. And you could be okay. In a case where the market's going down like this, when you have followed that plan, then the market goes down, you're not as concerned. You're just a lot more calm when you have no consumer debt and you have emergency reserves. And when the market goes down, then what you should be thinking is, well, do I have any extra money that I can maybe put towards the market during this time? Or if I'm dollar cost averaging and putting in some every month, whether it be through your 401k, your retirement plan, or just money that you're putting into an investment account, keep doing that. It's super important to be doing that during this time. You're buying more shares as the market goes down with the same amount of money. Eventually it will rebound and you'll really appreciate that. Our clients that did that in 2008 during the credit crisis were very happy once they came out of it.
Yeah, I've heard a few high-profile investors say, when the market's tanking, that's the Black Friday of the stock market, when you can buy stuff, at really discounted rates. So instead of running from it, it's when you should actually be drawn to it.
Yeah, and just to put another quote on that, Warren Buffett says, the stock market's the only place when everything goes on sale, everyone runs for the exits.
Right.
So
counterintuitive. So, and that's driven by emotions, which is the last thing you should allow to penetrate or infiltrate your decision making when talking about money. Okay, and again, not to dismiss the reality of when things happen, when economies go bad, you might be laid off. Or you might, in this case, in coronavirus, some companies are shutting down for a few weeks and you may not get paid for a few weeks. More reason why having a good plan, because, okay, if you don't get paid, it happens. It happened last year when government was shut down. That wasn't even a crisis in terms of, a pandemic, but life happens.
Yes.
But when you have an emergency fund, you don't have to worry about dipping into your investments when they're down too now, which is the worst thing you could do and cause a snowball effect.
Yep.
So at the end of the day, we're going to always recommend make sure you have a strong, solid financial plan that can help you weather these times and hopefully even put you further ahead when we come out of these tough times. So we hope this helps and we hope to see you soon.